Hi, welcome to the Market Alert for Thursday, the 3rd of November 2022. So yesterday we had the FOMC, the increase rates by the forecast 75 basis points. And then the headlines that followed, Powell pulls rug out from euphoric Fed statement reaction, terminal rate spikes, and a whipsaw action after Powell's hawkish presser takes the shine off slower hiking pace. Yeah, it was interesting because initially the market moved higher and they were hoping that they were going to see some sort of a pivot, and then Powell announced during his press conference we're going to continue, and you'll see the reaction to that in a minute. US stocks declined following Powell's hawkish press conference, and lots of sell, little panic. Bond volume move, index closed lower by 5% and VIX basically closed unchanged. So that's interesting that the VIX never moved. There must have been somebody selling into that to keep the lid on it. But we'll see what happens today. Today, economic news-wise, of course, it's the UK. And of course, the media in the UK are saying it's going to be the biggest rise since the 1980s, which is interesting because it's still only 75 basis points. And I thought we'd been raising rates by 75 basis points, maybe not. But that's the headline today. That's all at midday. Let me just change the times on this. There you go. So yeah, this is what the market's going to be waiting for today. See if they're going to follow the Fed. So we're going from 2.25 to 3% is the forecast there. Right, let's have a look at the Dow, S&P and German DAX, see what the market's reaction was to yesterday's Fed statement. Starting off with the Dow, you can see the market there moving to the downside, closing back below the 200 MA, convincingly actually, and the 5-bar moving average. Sideways overnight, which we can see there with the market finding a bit of support. In the 30-minute chart, the market reacted positively to begin with, trading up to Tuesday's high, and then just absolutely hammered lower as soon as Powell said, no, we're not stopping, we're going to continue, and that sent the market lower. If you look at the 1-minute chart, you will see in this bar here, this particular bar there, we had 300 points, and it didn't happen in a minute, it happened in literally seconds. I should have recorded this. It just absolutely fell out of bed, straight down, and then eventually they found a bit of support at the 200 MA. Demand came in, they held the market, they brought it back to the 20 bar, what they were selling into the market, and then moved it back down. These are 1-minute bars, but again, it doesn't matter what time frame, and the principles apply just the same. So going back to the daily charts, whether the weakness continues or not today, who knows? I'll just draw some fibs in on the downside. On the upside, it's just a matter of being able to click twice on this one bar to show where we could go back to on the upside, but it depends on the market's reaction to the Bank of England today. But that would be the way I would draw this up. I don't know which way it's going to go. We could see the weakness continue now as Powell wants to continue to increase interest rates, but we'll just have to wait and see what the market thinks of this at 8 a.m. In the German DAX, similar picture. The market trading lower, didn't trade up to Tuesday's high during yesterday's session. Market sideways through the 5-bar moving average. Let's have a look at this in a bit more detail. Down in the 30-minute chart, you can see that the market barely moved yesterday. I didn't do any trades yesterday. Let me just draw this in there. So we were sideways, then we had a bit of a move to the downside, and then we continued just slightly lower to the Tuesday low before the market had the news from the Fed, and then the market sold off. And at the moment, we've tested yesterday's low already, and we can see that the market's bounced off this up towards the DP level. Certainly the BRN there of, let's have a look, 13,199. So this is 13,000 here. This is the magical number, isn't it? No, this is 13,100 down here. So we've got 100 points lower before we get to the main psychological level. Yeah, I can see it there now. So yeah, 13,100. This low is going to be important, but the 100 points below this, if the market does move lower, is going to be crucial. That 13,100 level. The market's down 300 points for yesterday anyway. It's had a bit of a breather. 250 points, having a bit of a breather there. In the 5-minute chart, the market's reaction, it was sideways for the rest of the session. I didn't trade yesterday, and then I had to go out last night, unfortunately, after the initial part of the move, but you can see there eventually the DAX following the Dow to the downside, but overnight finding a bit of support and trying to move up. Certainly came off the low of yesterday and traded up to, like I say, 13,200, which is just here, and the market now finding support at the 13,150 in an attempt to move higher. Again, we'll just have to wait and see what happens at 7 a.m. In the S&P, similar picture through the averages there, both the 5 and the 50, but finding support at the 20 bar at the moment. In the 30-minute chart, again, you can see initial reaction to the upside, and then we just sailed through all of these, including Tuesday's low, and just continued all the way down. And again, overnight, the market has found support at the low of last night, the market's reaction to what Powell actually did and said. In the UK market, still looking fairly bullish at the 5-bar moving average. Could see the market bounce off this 5-bar moving average as far as the FTSE is concerned. A bit more detail in the 30-minute chart. Market down, then up, and then down. Again, it depends on how the market interprets what Bailey is going to do at midday today. And again, it could be fairly quiet, couldn't it, until that point. But the low of yesterday already being tested by the overnight market there. And in the currencies, GBP, JPY trading lower because the dollar moved higher, back through the 5-bar moving average, finding a bit of support overnight. Again, the market's reaction to this was really uneventful, you can see there, but prices continuing lower overnight as far as the GBP, JPY. The pound, obviously a bit weaker there, but it could see a move back to the upside today when Bailey increases rates. And there's the GBP reaction, more impressive there than the GBP, JPY. Up and down, and at the moment the market sideways to lower, but no doubts once Powell's done his magic, a rate increase strengthens the currency. And finally, the dollar's reaction, you can see there up off the 50 EMA and just above the 200 MA as well. Interesting enough, considering the number of rate increases we've had, you'd think that the dollar would actually be back to its highs here, but it's not, nowhere near. So this is also interesting that it's starting to lose a bit of impact here. We've seen the constant rise all the way through over the last few months, if not year, and yet we continue to raise rates, and now the dollar's sort of not reacting as it did before, which is a very interesting pattern taking place there. The internal reaction yesterday, the dollar index going down initially, and then as soon as Powell said he was going to continue, they sent the market to the upside. You need to take out yesterday's high in the dollar to continue to move higher. But of course, like I say, Bailey's out today at midday. So it'll have to decide whether there's more precedence over the pound or the UK rates or US rates, which I think we all know the answer is the US ones. But it will be interesting. And in the metals, silver obviously down because the dollar was up. You'll see the sell-off there. And the same in the gold market, also down as well. 30 minutes there, you can see exactly the same thing, but finding support overnight at yesterday's lows. Okay, that's about it for this one. We'll just have to wait and see what happens with Bailey, and then tomorrow, of course, we've got the non-farm payroll numbers as well. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.